Today, we will explain chapter number 5 and the very important topic, which is taxation or introduction to taxation. The first topic in our chapter number 5, definition of tax. What do we mean by taxes? Taxes are compulsory payments associated with certain activities. So, when you pay a tax, there is no direct benefit. So, you pay a tax by the power of law. Tax revenues are used to purchase necessary inputs. This is for the government use. Okay? So, the government collect taxes by the power of law and use the revenues of taxes to purchase necessary inputs, to purchase necessary products or public products, and to provide public or social goods. In the last chapter, chapter number 4, we presented what do we mean by public goods or social goods. The same meaning. If you use the public good or social good, this is the same meaning. Another aim of the tax that the government use taxes to redistribute the income or purchasing power among individuals. So taxes collected from rich individual and converted into subsidies for poor individuals. Taxation reallocates resources from private to government use. So in this case, we compare between the private use and the government use by the following. Number 1, reducing the ability of individuals to control resources. So in general, when the government impose taxes on the private sector, okay, this means that the income for private sector decreased by the amount of tax. The income of private sector decreased by the amount of tax. The second point, the tax revenue collected by government used to provide public goods and services, and we explain this point in details. So, when you pay a tax for you as a corporate or individual, in this case, there is no direct benefit, but there is sure indirect benefits. Indirect benefits, in this case, we talk about benefits from public goods, benefits from social goods. So, when the government collect taxes, maybe use the revenues to development and improve the roads, to set up new roads, to build the bridge, to improve the electricity power, to building social housing, and so on. So, in this case, we talk about the benefits for public, not for private individual. The next, concept of tax system. In this case, we distinguish between the broad concept and narrow concept. Okay, the broad concept or the wide concept of the system that consists of political, economic, and social environment or social aspects or social factors. So, in this case, we talk about what is the aim of tax. Okay, maybe for political, for example, some political regimes support to increase or encourage to increase the tax rate. Another political regimes encourage to decrease the tax rate. So this is the what about the vision for political regimes, political institutions? What about the decision making in this country? The same in the economic issues. In economic issues, we talk about our economy in the declining stage or in the booming and up stages. Okay, there's improvement in our economy, performance, or declining. Social aspects, what about the redistribution of income? What about the rich individuals, the percent of rich individuals? What about the percent of poor individuals? This is all we talk about the large concept of tax system. The narrow concept we talk about the applied, or what about the mechanism to impose tax? What about employees required to impose taxes and collect revenues? What about the rules? What about the procedures to collect taxes? So in this case, this is fact. The tax structure diverges from one country to another. Okay? Yes, this is fact. In developed countries like USA and Europe, this is advanced and flexible tax structure and tax system. In developing countries, yes, there are barriers in tax system and tax structure. The next elements of tax structure. What about tax structure and tax system? In this case, we focus on the narrow concept or the narrow definition of tax structure. Technical element or the technical factor. In this case, we talk about the political choice of different types on taxes. So maybe taxes on the next point. We will talk about taxes may be imposed on individuals, may be in corporates, and may be imposed on the resources or factors of production. Okay, another types of taxes, we can divide taxes into direct taxes and indirect taxes. So in this case, we talk about the technical element and decision making. The next organizational element, this is when we talk about the harmony between different taxes. So there is, you should, when we talk about taxes, in this case, maybe there is a value add tax. Value add tax, abbreviation VAT. And at the same time, sales tax. There is a conflict between sales tax and value add tax. So in this case, you should choose or select, you impose sales tax or value add tax. You cannot impose the both of taxes. This is achieved by monitoring the collecting taxes capacity and reach equity and harmony between administrations. So the important point in tax, how you can create harmony between the taxes and categories of taxes. Okay, taxes have to be imposed with the least possible damage or greatest possible advantage. Okay, in this case, you should to minimize any social burden. And tax can be, yes, encourage stability and any disequilibrium in the economy. This is bad for tax environment, because this is very critical point. You can, okay, all countries impose tax, but if you increase the tax rate over the average in the world, in this case, this is negative impact on investment in your country. Okay, negative impact in investment in your country. So this is critical point. How or what is the optimal rate of taxes you can impose to collect revenues? Components of tax structure. In this case, we will distinguish between the direct and indirect. Direct tax and indirect tax. Direct tax, these taxes are mainly imposed on income and take into account individual personal capacity to pay. Individual personal capacity to pay equal the amount of tax you can pay or not. What about the measure we can use? We can use this tax relevant to your income or not. This tax relevant to your income or not. For example, suppose your income equal 1,000 Egyptian pound and the tax equal 10 pounds. Okay, this is relevant for your tax. But if your tax equal 1,000 Egyptian pound, if your income equal 1,000 Egyptian pound and the tax equal 500 Egyptian pound, so the 50% of your tax go to the tax revenues. This is a burden and very important and critical. What about the second point, indirect tax? Indirect tax, you cannot move or convert the tax burden. Tax burden equal, in the next pages we will explain. Tax burden equal, suppose the government imposed tax on individual X. Okay? Individual X will increase the price of goods, or producer X will increase the price of goods by the amount of tax, in this case the burden of tax converted from producer to consumer. This is indirect tax. The indirect tax, you can convert, you can transform the tax burden to another individual. So the direct tax, you cannot convert the tax burden to another individuals. So indirect taxes, these taxes are imposed on the spending of income. They don't take into account the taxpayer's ability to pay. So the direct taxpayer ability to pay, this is very important, and this is the first measure and the first variable we can take into account. But indirect tax, the taxpayer's ability to pay, there is no relevant, because the producer can move or can transform the tax burden to another parts. Taxes are compulsory and not directly related to benefits received by the taxpayer. Yes, we explained this point, and there is no direct private benefits. No direct private benefits for the taxpayers. But yes, sure, we talk about indirect benefits. But the indirect benefits related to the public good, not private good. Okay? Features and history of taxation. In this case, we talk about the history, and in the last decades, we talk about the tax collected to finance wars. Another history of taxation, when we talk about how you can finance development. Finance development to create or to build infrastructure to improve the economy. All the events in history, we talk about the tax. Tax is the very important source for all nations. Objectives of taxation. The first, provision of public goods. So in this case, the first objective of the tax, the government used tax revenues to provide public goods. So in this case, as we presented in the last chapter, we compare between the market efficiency and the market failure. What about the efficiency? Efficiency appeared when there is exclusion principle applies. If you can exclude individuals or prevent individuals to benefit from any good, in this case we talk about efficiency. So the next, there is no externality. The next required, there is no externality. And number 3, perfect competition. When we talk about efficiency for the market, number 1, you can exclude any individual cannot pay, and no free rider. If you remember our terminology in the last lecture, when we talk about the free rider take a benefit without any payment, and the other individuals pay the cost for this free rider. So number 1, you can exclude, okay, or prevent any individual to benefit from product with no payment. If no payment, no benefit. This is the exclusion. Number 2, no externality, positive or negative, no externality. And the last, the market structure, perfect competition. So the opposite, on the other hand, if you talk about the market failure, in this case, okay, number 1, the exclusion principle, no, you cannot exclude because this is public good. The market failure in the following cases, when you cannot exclude any individual and there is a free rider, okay, and there are externalities, positive and negative, and there is imperfect competition. So when you compare between the first 3 points, exclusion principles, no externality, market perfect, competitive, this is inefficiency of the market. What about the market failure? Market failure, okay, make the opposite or the number 1. When we in the number 1 we talk about you can exclude him. There is in number 1 in the market failure you cannot exclude. Number 2, there is no externality. In market failure there are externalities. Number 3, the market perfectly competitive or perfect competition. Number 3, in market failure, imperfect competition. So when we talk about the public good marginal cost equals 0. Marginal cost, as we explained in the last chapter, marginal cost of providing any public good equals 0. Exclusion cannot apply it, and there is no exclusion, okay, and no rival or all members of society must consume the same amount of the public good. So as a result of this market failure, okay, public goods become the responsibility of the state to provide them. So we need, or the government need, the power or compulsory payment by taxes. The government collect revenues from taxes to provide and finance public goods. Okay, what about the other scenarios? Can the government print money? This is a question. Can the government print money and pay for public good? Yes. If the government print money, this is the disaster and this is the end for any government, because the inflation will increase and we can call hyperinflation. And this is very bad for purchasing power. Okay, so the government collect revenues, okay, by tax as the best solution if the government print money, because the printing of money bad scenario for any economy, and this is the end for any economy. Another possibility for the government can borrow the money internally or externally. In this case we talk about the debt, public debt. When the government take a loan from internal, from external organizations or countries, in this case we talk about the public debt. Yes, public debt, in this case we talk about burden for the government, because you will pay the debt plus the interest rate. The debt, the amount of debt plus the interest rate. So taxation is very important source and cheap source for the government to collect revenues. What about the other scenarios? If the government print money, the end of economy. Second scenario, if the government borrow from the internal or external sources, yes, it's possible for the government, but this is burden for the economy. burden for economy, and you should calculate the benefits and costs for loan. Okay, another topic: the government provides merit goods. Merit goods in this case we talk about merit goods equal products or services, goods or services the government encourage to provide as a public good, because the benefits of merit goods, benefits for all the society, or benefits for all the residents, or benefits for all the country. For example, learning music for childs. In this case, we talk about preparing generations, we talk about preparing individuals, okay, in the future. So this is merit good. And free school meals, yes, this is merit good, because we interested with the health of our child and the power and the healthy food and so on. But on the other hand, the government should discourage the demerit goods. Demerit goods equal harm goods, like tobacco. So when we talk about, when we ask you, should the government impose tax on merit goods? Your answer, no. Because the government should encourage the merit goods and provide subsidies, not taxes, for the merit goods. On the other hand, when I ask you, should the government impose tax on the demerit goods? Your answer, yes and sure, like tobacco and drugs. Okay? In this case, drugs in some countries, it's available to consume and produce in some countries. Okay? So the demerit goods, the country should impose tax, and in this case we call sin tax. Any tax imposed on demerit goods we can call sin tax, because this product is very harmful for consumer and individuals and all economy. So the government imposed tax with high rates. Okay, so this is the difference between merit goods and demerit goods. What about the monopoly? In this case, to prevent monopoly and encourage competition, the government has taken leading role that needs to fund it by taxes. Okay? In general, the government can use tax as a tool to provide competition or to encourage competition by provide tax incentives in a specific industry or in a specific production, okay, to encourage producers to enter the market and open new firms. When the number of firms increase, in this case we talk about increasing in the market competition. In case of externalities, maybe in the last chapter we explained the externalities may be positive. In this case we talk about external benefit, and maybe negative. In this case we talk about external cost. So the government has to step into process to correct any externalities. What do we mean by correction? The word correction. In case of cost or external cost, in this case we talk about impose corrective taxes. Impose corrective taxes in products of goods. And giving corrective subsidies in case of external benefits, and we explain the both measures in the last chapter. Ensuring economic stability. Yes. In this case, any economic performance or any economy performance, ups and downs. In this case, we can call economic fluctuation. So, in this case, the government can use the tax to collect revenues in case of booming. Booming equal the economy in high performance. So you can collect taxes. And in case in the down case or downtrend, in this case, we talk about the government can provide tax incentives or decrease the tax rate. So the government is responsible for ensuring economic stability that can be achieved through number one, reasonable degree of price stability. Okay, in this case we mention inflation. We mention inflation rate. Number two, high employment. The government can use taxes. When the government decrease the tax rate or provide tax incentives, in this case, attract new producers, at the same time increase the employment rate. Employment. In other words, decrease the unemployment rate. Number three, improve in the balance of payments. In balance of payments, we talk about the two sides, revenues and expenses, or the exports and imports. And this is the case, the gap between export and import. This is very important. So, number four, acceptable rate of economic growth. Economic growth, in this case, we talk about the increasing in the average income per capita, or the income per capita when increased, this is a positive economic growth. When decreased, this is negative economic growth. So the tax, we can focus on tax as a great tool or the powerful method to influence on the economic activities. Number three, helping in its economic development process. Yes, tax system or tax revenues collected to provide mega projects. What do we mean by mega projects? Projects that required minimum $1 billion or 1 billion of any currency. In this case, talk about mega projects. Mega projects in this case like infrastructure. Okay, so the tax system can used as a major tool in this field. Okay. What about the taxation policy? Taxation policy may efficiently used to reduce consumption and increase saving and investment. This is a terminology equal tax holidays. Tax holidays equal that you can decrease the tax or provide free times of tax that the producer cannot pay on these periods. Okay. Number four, achieving equitable distribution of income. The word distribution of income, in this case, we compare between two categories: high income individuals, okay, and the low income individuals. So the government collect taxes from which category? The government collect taxes from high income categories or individuals and convert into transfer the purchasing power, or provide subsidies for the poor income categories. Number five, promotion of social and economic welfare. In this case, when we talk about the role of merit goods, we repeat the word merit goods. Merit goods equal specific products or services that the government encourage to produce and consume. The government encourage in the production process and consumption process. So the government promotes social and economic welfare by increasing the merit goods. Merit goods mainly positive effect on health and education. Merit goods positive effect on health and education. Okay, the merit goods can be provided privately. Okay, but if left to the market forces, merit goods will be consumed. So in this case, we talk about the government go to the market and they enter the market to provide the merit goods to benefit from externalities, positive externalities. At the same time, as we explained in the last pages, the government used the power to prevent the demerits goods. Demerits goods. Like alcohol, like cigarettes and tobacco and so on. So, in this case, when we talk about merit goods and demerit goods, this is the side or the economic and social welfare. Economic and social environment. Principle of an idle tax. An idle tax, in this case, we talk about the tax rate. The tax rate maximize revenues and minimize conflicts. Ideal tax rate maximize revenues with minimize any conflicts or problem. Adam Smith provide a proposal about good tax and display the following features. Number one, the ideal tax based on Adam Smith. It should reflect person's ability to pay. This is the case of equity. Okay, we agree with this principle or this feature, the ability to pay. In this case, we talk about the equity. Number two, it should convenient with the respects of timing. Okay, this is the very important time. The time to collect revenues. The time to collect taxes should be relevant to the resources for the taxpayers. Resources for the taxpayers. It should be certain. Okay, in this case we talk about transparency, and it's cleared for the taxpayer to pay which percent of tax I will pay, 10% or 12% or whatever. It should be administrative efficient and not causing economic distortion. Okay, in this case, economic distortion when the tax rate leads to prevent investment and get the investors out of the economy. Okay, so the administration, in this case we talk about economic distortion with no economic distortion for this tax rate. In general, we talk about the ideal tax rate by the following criteria. So the four categories or the four factors we talked or were presented, this is the Adam Smith point of view. Number one, simple, certain, and convenient. The same. Simple tax rate, this is simple related to the ability. And ability for the taxpayer. And this is administrative. When we talk about the administration to collect the tax, this is simple administrated, okay? And the all parts are aware by the amount. Okay, if I am the owner for any corporate, okay, it's clear for me that my tax rate I will pay 10%. Okay, in this case we talk about simple. Okay, I will pay tax rate on this address or by e-money or by different of methods. Certain, okay, I know the tax rate percent. And convenient related to my ability and the method of payment. Number two, flexible. Flexibility in tax rate equal. In this case, we talk about minimize the difficulty to changes for any individuals or for any taxpayer. So, flexibility, suppose the economy performance down. So, flexibility equal the administration of tax can decrease the tax rate to relevant to this circumstance or this feature. Administrative efficiency, in this case we talk about the cost to manage, the cost of management, the cost of administration to collect tax. So suppose the government collect taxes with 1 million Egyptian pound. What about the administration cost? In this case, the administration cost should be at minimum percent. If you collect 1 million Egyptian pound at the tax revenues, if the administration costs equal greater than 1 million, okay, this is a puzzle. This is problem for the government. So when you collect any amount of tax revenue, the administration cost should be at minimum percent. In this case, we talk about administrative costs and the complying costs. So in this case, we talk about the legal. What about the legal issues for the taxpayers? This is complying costs. Complying costs should be kept reasonably low at the preference to administrative costs. So in this case, we talk about the taxpayer. The taxpayer should pay the tax with lower or without any complying costs. Okay, to collect the taxes, but the taxpayer pay the actual amount of tax. Neutral. What about the feature number 4 for the ideal tax rate? Neutral in this case, we talk about no distortion in the economic choices. Distortion equal the burden of tax at optimal level. The burden of tax at the optimal level. So if you impose tax on a specific producer and the producer close the activity or close the factory, in this case, the tax not neutral. In this case, the tax biased and create distortion in the economy. So neutral, we talk about minimize the distortion rate. All economic activities have costs and benefits. Yes, the same taxation creates a degree of distortion, but we need to decrease the distortion rate. So the tax wedge equals the marginal cost of the activity minus marginal benefit of the activity. This is the tax wedge. So suppose any activity like factory for producing food, okay? So the tax wedge equal marginal cost for the factory of food minus marginal benefit of the factory of food. This is the tax wedge. If the fiscal policy is used as a means to manipulating the economy, tax cannot be neutral. In this case, when the tax rate create or leads the producers out of economy, in this case the tax not neutral. Equitable, in this case we talk about equity issue, and the tax must not only be fair but must be seen to be fair. So in this case we talk about the tax evasion. Tax evasion equal, suppose the tax imposed in a producer by 1 million of Egyptian pound. 1 million of Egyptian pound, okay? The producer will provide or declared that there is no profit to pay this tax, and we can make fake documents to prove that there is no payment for tax for me, no profits, there is no sales, and so on. In this case, we talk about tax evasion. When you should pay 1 million of tax, for example, and you cannot pay this amount by providing some wrong documents and not real documents. So in this case, tax system is considered to be equitable. When the tax evasion increased, this is equitable, the tax system. So in this case, we talk about equity is concerned with distribution of the tax burden. How we can distribute the tax burden? By the following. Horizontal equity, this is horizontal equity, which means that the people similar situation are treated in the same way as they pay the same tax. When we talk about the horizontal equity, in this case we talk about all individuals, all peoples, all firms will pay the same tax rate. For example, if the government introduce or provide a law that all individuals will pay 10% as a tax. In this case, we talk about horizontal equity. We pay the same amount of tax. What about vertical equity? In this case, we talk about unequal rates. Unequal rates. This is depends on the degree of the payment, the ability of payment. Okay? And this is required. The rich will pay more than the poor. The rich will pay more than the poor. In this case, the horizontal equity, this is simple to apply, but the vertical is very difficult and complicated to apply because it required to distinguish between the taxpayers based on the ability to pay. What about the next topic, the effect of taxation? Effect of taxation in this case, when the tax imposed on the producer. In this case, the producer will move or will transfer the tax burden to consumer. Suppose when the cigarettes price increased, okay, from 20 pounds to 25 pounds, the government collect revenues from the Eastern company. What the Eastern company will do? The Eastern company will increase the price by the same amount. So who pay the tax? The consumer pays the tax. Smoker will pay the amount of tax. So in this case, we talk about transfer the tax burden from the producer to consumer. Okay? In this case, when the buyer will find that his income insufficient to buy the same quantity of taxed good, in this case, talk about income effect. Okay, say any smoker purchase two types of cigarettes. Okay, in this case, two units of cigarettes. In this case, we talk about the smoker will produce only one. This is the income effect. The next, customer may try to find substitute for taxed good, but in this case, what about the substitution or the substitute goods for cigarettes? In this case, we talk about substitution effect. Okay, but all in all, it's a very, very important point. The degree to transfer the tax burden depends on elasticity. Price elasticity of demand. When the demand inelastic, you can transfer the tax burden without any problem. When the elasticity or price elasticity of demand inelastic, you can transfer the tax burden without any problem. When the elasticity of demand elastic, you cannot transfer the tax burden. The tax transfers a part of purchasing power from private sector to the government, and in this case we talk about the labor and capital. Excess burden. Excess burden. Taxes may alter economic activity and produce what may be called excess burden of taxation. In this case, what about the excess burden? We will use a terminology dead weight loss, DWL. Dead weight loss, DWL. Dead weight loss or abbreviation DWL equal a reduction in economic efficiency below the level achieved with an optimal tax. Reduction in economic activity or economic efficiency below the level achieved with an optimal tax. So, what about the principles of excess burden? Number one, change in factor supplies. In this case, we talk about any change in income factor. Income factor owner, we mentioned the factors of production, like workers, like capital, and so on. Any change in income factor owner will change the quantity of factor available. So, if the tax reduces the net wages more than the optimal tax, some workers will drop out of labor market. Okay, so when the taxes increased, and this is excess burden for taxes on wages, in this case the workers may drop out and let this labor market, or work few hours. In this case, we talk about excess burden. Number two, loss of allocative efficiency. In this case, we talk about the tax makes changes in consumption and production patterns. So the consumer will shift from higher price to lower priced goods. In this case, we talk about the substitutes. If the original product taxed and increase the price, the consumer can go to the lower or substitutes goods. Loss of technical efficiency. In this case, if the optimal technical efficiency has been achieved prior to the tax may reduce the economic welfare. The economic welfare in this case, or in this point, measured by decreasing the output below the optimal level. So, if the government should produce 100, no, we can produce 80, 100. 100, we can produce 80. Okay, so the optimal level 100, but the private sector produce only 80 units because this is the lower level. What about the forms of taxes charges? Taxes and charges are withdrawn from the private sector without obligations, and taxes are compulsory and tax provided by a large part of receipts. So, three features we talk about the taxes and the charges. When you pay tax, there is no direct benefit for you, but when you pay charges or fees, in this case, you benefit from this product, like your license for cars. In this case, we talk about charges. Taxes compulsory, but charges based on you want to benefit from this product or not. You pay tax without no choice, but you can pay charges if you select this charged product. Tax is provided by a large part, but the charges provided by little or some individuals. The point of classification of taxes. Number one, taxes may be imposed on producer, on product, or on factor market. Factor market equal labor, land, capital, and entrepreneur. Number two, the tax may be imposed on sellers or buyers. Number three, taxes may be imposed on households or firms. And the last, may be imposed on the resources used or the taxpayer account. Equivalence between taxes. There are certain pairs of taxes. Okay, in this case we talk about number one, in competitive market, it makes no differences to impose taxes on seller or buyer because the two sides, okay, has the same results. Okay, so in competitive market, this is very important point. If you impose tax on seller or buyer, there is no change, there is no differences because the price equal all the price plus tax. The price equal old price, new price equal old price plus tax. This is in competitive market. A tax on employer imposed on his payroll gives the same result as the tax imposed on the income of wage earners. So in this case, there is no differences between the tax on payroll for the employer and the other income sources. Tax on factor purchases equal tax on factor income. Tax on product purchases equal tax on product sales. So there is equivalent in tax, equivalent on tax. So for example, tax on factor purchases, if you purchase any raw material, okay, in this case the price will increase by the volume of tax. At the same time, when you pay the value for the raw material owner, in this case the tax on factor income. Taxes on holding wealth and its transfer. In this case, we talk about different categories of taxes. Number one, personal taxes and interim taxes. Number one, personal taxes are adjusted to the taxpayer's personal ability, but the interim taxes are imposed on things like activities or objectives like purchases. Okay, so the personal tax, in this case, what about your income? This is personal tax. But when we impose tax on sales or properties, in this case we talk about the interim taxes. Personal tax must be imposed on the household side, but the interim tax imposed on household or firm. So the personal tax related to household only, consumers only, but the interim tax may be imposed on consumers or producers. Personal taxes on the proceeds from the sales of factors of production must be imposed on households as a personal tax, but the interim tax is imposed on factor payment, and firms cannot distinguish between the tax payment and in particular income. Personal taxes on consumption must be placed on the household. In general, you can summarize this topic, that personal tax related to household, like income tax. But the interim tax, like sales tax or VAT value add tax, can imposed on firms. In this case, we talk about some categories. Direct and indirect tax. Direct tax imposed initially on the individual or household that can bear the burden and cannot transfer the burden of tax. Direct tax, when you impose tax on individual X, individual X must pay this tax and cannot transfer the burden, in this case direct tax. But what about indirect tax? Indirect tax, if you impose the tax on firm A and the firm A transfer the burden to another parts. So in this case we talk about indirect tax. So if you want to distinguish between direct tax and indirect tax, who pays the tax? The target taxpayer pay the tax, the tax imposed on this taxpayer and the taxpayer will pay the tax. In this case we talk about direct tax. When the tax imposed on the taxpayer and another taxpayer pay the tax, in this case we talk about indirect tax. So transfer as a negative taxes. Transfer payment equal any financial assistance from the government, introduced or provide to the poor people or low income people. So transfer payment by the government flow in the opposite direction of tax stream. So when we talk about tax, this is in cash in for the government, cash inflow. When we talk about transfer payment, this is cash outflow for the government. And we can consider the transfer payment as a negative tax. Negative tax, because the transfer payment equal payment without any returns for the government. But mainly in this case we talk about social reasons and social benefits. Requirements for good tax structure. Back to the last in this case, transfer considered negative tax. Why? Because the government provide taxes and converted into transfer payment provided for the low income categories or low income population due to the social security benefits. Requirements for good tax structure. Number one, tax collection should be adequate in time, adequate in facilities. Distribution of tax burden should be equitable, everyone. In this case, we talk about the fairness or the fair share between individuals. Number three, the final resting place of tax incidence should be more important than the point of tax imposed. So in this case, we talk about the final outcome for this tax. The final outcome for this tax. Taxes should be chosen so as to minimize interference with the economic decisions. In this case, we talk about how you can minimize the negative impacts in tax. So tax, bad news for producer. How you can minimize the burden for this bad news. Tax structure should facilitate the use of fiscal policy like stabilization and increasing the economic growth and target some economic growth to create economic stability in this country. Tax system should be fair to taxpayers. In this case, we talk about fair and transparency. All sides, all factors cleared for the taxpayers. Okay? In this case, we talk about all factors cleared for the taxpayers. Administrative and compliance costs should be low. So you should minimize any administrative costs and compliance costs for the tax. Okay, thank you, my dear students. We finished this